are you too late for the good interest rates on accounts if you've recently built up enough to maybe start saving? The good answer is no. And I'll get into that now in this video. And as always, if you're liking the content, if you can like, subscribe, comment, and turn on notifications as well, that'd be great. Because it really helps the videos. Right, so we'll get into it. So, just from a very brief look earlier, so it's 26th of July, and it's more relevant to the UK, but it also applies to US, Canada, etc. Yeah, so you can get some really good interest rates still. And that's despite obviously in the UK the interest rates might drop in August, but that's not a guarantee. And I don't think anyone really knows. And if there is a drop, it's probably not going to be a massive drop. Like it's 5.25% now. It could drop to 5%, but a lot of bank accounts kind of sit around that in the high end for interest sits a little bit below there, so it might not make a massive difference. But over the next year, that's where it could potentially drop by much more. Again, not guaranteed, and there's quite a lot of videos on maybe us not really ever going back to the zero, 1% interest rates, 2% the target in the UK. But even at 2%, say, that'd be a much lower level of interest than you get now. But at the moment, anyway, Bank of England interest rate 5.25%. You can easily get cash ISAs that do between 5.2%. You can do with CHIP. There's a cash ISA for 5.1%, and that's monthly. You can get 5.2% on Trading 212, and that's paid daily. And you can actually get that same 5.2% in the UK, just on money that you just generally hold with them in a qualifying money market fund. So you don't have the same protection as a bank, but it's in theory it's got a level of safety, as in if those funds start dropping, it means the economy as a whole is quite bad. So your investments as well probably would be not performing very well. So if you're holding cash to be slightly safer than an investment, then it's maybe not the way to go. Whereas if you want certainty, there's better accounts for that, I would say. Anyway, yeah. So for example, with Lloyds Bank, and there's other banks that will have similar options to this. You can get a 4.5% cash ISA rate for 1 year, or for 2 years it's 4.1%. And you'd have to put in 3,000 as a minimum to get that, and I think you have to have been a customer for a month and a half or so, 40 days. But if you just want a high level of relatively high level of interest and it's secured for the period, and I suppose that would be best if you've got the full amount of your ISA, so 20,000, and you put it all in day one, you'd start getting that interest monthly at 4.5% for the next year. Or if you want to lock it in for the 2 years, you get 4.1%. And when you're looking at that maybe 2 year period, the Bank of England interest rate could easily be below, or the rate that the bank will pay you could be below 5.25% in 2 years' time. No one knows for sure, but if it normalizes to somewhere like 2 or 3%, your bank, even if it's passing on a good level of that, will be 2.75%, 1.75%. So 4.1% compared to that's quite good. But with these type of accounts, you just got to be aware that they do kind of lock you in to a level. There's often penalties if you take out money early. You lose so many months interest, or you can only access it 3 times a year, etc. So just be aware. It's maybe to lock in money that you maybe don't need easy access to. If you need easy access, you may be better going with something with chip or something like that. You can get 4.84% on their just general interest on their savings account. Obviously, the cash ISA is higher, but it's also variable. And then Trading 212, again, money that you're just holding with them. It's obviously very variable based on the interest rate, which will be linked to in the UK, Bank of England, but in the US it's 5.1% at the moment. But again, if the advisory rates go down, it probably would drop. And in Europe, it's I think 4.1% with trading 2 and 2, and I think Canada's a little bit less than that. Some are a little bit higher, like Hungarian, I think is maybe 7%. So they are higher, but they also could drop because it's a variable. So if you want the stability, it's maybe going for the fixed levels. And if you don't, for some reason, don't want an ISA, or you've already used up your ISA allowance, you can just get the typical, savings with 1 year term savings. And how that kind of works is you're putting in either lump sums, or some of them restrict you to only putting in a certain amount per month. But you put that in, and you can easily again, just with Lloyd's, because that's who I've looked at today. You could do 4.5% interest on that as well, which is exactly the same as the ISA. And the entry level is a bit lower, £2,000, obviously, not low. Whereas things like the chip, 4.84%, which is higher but variable. There's no minimum amount. And the same with trading 2 and 2. There's no minimum amount. So there's quite a few options there for what you want to do with your savings. Just be aware that some of them are a bit more restrictive than others. So hopefully that's been helpful, and I'll once they maybe announce some changes to the interest rate in the UK, I'll maybe have a look at if that changes any of these accounts. But the real advantage of locking in a rate with money that you're planning to save long term anyway, is that even if the rate dips, you'll still be getting that rate. So that the 1 year options, like I've previously had ones at, or still actually get 6.25% on them. And that's because I locked in that rate prior to any drops in the interest rate. So if you're thinking, the interest rate is going to keep on dropping, then it's whether you want to lock it in for 1 year. And although they may be better to fill up straight away in terms of the interest you get back, you can put in towards the minimums as well. So 3,000 for the ISAs with Lloyd, 2,000 for the regular savings account with Lloyd's, or there's no minimums on the other ones. But so you can have a look at that. And as always, not financial advice, but if you find it helpful, pop me a comment. And if you want me to have a look at anything else, I'll have a look at that. Great, thanks now.